Hey, what's up guys, John here. Can't Pay credit card is exploding on Google Trends. In fact, it's far surpassing what it was during the great financial crisis, not even in comparison.
Credit card debt delinquencies are taking off. New credit card delinquency rates have surpassed their pre-pandemic level.
I mean, look at what's been happening to this chart over the last 6 months. It has just been launching into the stratosphere. But if you look at where we were during the great financial crisis, you can't compare the two levels. But what you can start to see is a very unique change that's happening with consumers, credit card companies, and the U.S. government. Everything is changing structurally when it comes to capital being lent out to consumers and being lent to businesses. And entrepreneurs and Americans as a whole need to know what's coming. And I'm going to break it down for you in this video with clear, verifiable facts. Please hit the like button. Hit the like button. YouTube will share this content to educate the people about what's really going on in America. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description below this video. Schedule a free strategy session. Take a look at this. So, when you look at this chart building, you have to ask yourself what's going to happen over the coming months with holiday spending. What's going to happen with the impact of student loans? I believe that this chart is going to continue to run dramatically over the next 6 months. And with it, we're going to start to see credit card companies looking at this completely differently. Sure, many people say, hey, they're making 25% interest. They're making 30% interest on the money that they're lending. But when you start to see the default levels that are happening with credit cards, when you start to see what they've done in the past, these credit card companies have done in the past, it's very revealing. So during peak fear, July 22nd, 2020, this is right during when everything was shut down, people were afraid to go outside of their houses, all of that. Credit card companies, 70 million people, they had their accounts either closed or their limits cut. 70 million. That is roughly a third of the entire U.S. credit card users, right? Some 70 million people have had their credit limits reduced or accounts closed involuntarily since May, according to a new survey by LendingTree. So you start to think about what's happening here. If they did this before, when peak fear was out, what do you think will happen when you start to see peak defaults, right? They're going to do the same exact thing. Writing's on the wall. They said that this is according to the Federal Reserve. This is very interesting, right? They say the nation's credit card debt stands at about 1.1 trillion. This is from Federal Reserve data, right? 1.1 trillion. They said that figure was in 2020. So 2020, they're saying 1.1 trillion. Now they're saying $1.080 billion, as if credit card debt has reduced over the last 3 years. I believe those numbers need to greatly be reconsidered. I think that what we're probably looking at is a much higher credit card debt load than Americans are aware of, and that the mainstream media is telling everyone about. They're now saying that we have $1.080 billion in overall credit card debt, up $48 billion, 4.7% from the second quarter. It is also the second consecutive quarter. The total credit card debt has breached the 1 trillion mark over the past 12 months. Credit card balances have risen 154 billion. The largest 12-month increase on record dating back to 1999. So when you see this and you see U.S. credit card balances, the largest yearly leap on record, here's what is very fascinating. Credit card defaults are starting to really soar. When they say, people are searching Can't Pay credit card, you have to wonder, well, what's happening to defaults? What's going on with consumer lending? And this is what we're starting to see here. So credit card delinquency rates at smaller banks hit a record high of 7.51% in the second quarter of 2023, up from 6.01% the same time last year, according to the Federal Reserve Bank. That contrasts with a lower delinquency rate of 2.63% second quarter in the top 100 banks compared to 1.17% a year ago. So you're starting to see these defaults picking up quarter after quarter after quarter. And with subprime, people with bad credit, their delinquency rates are 9%. 9%. That's like a payday loan type of delinquency rate, right? Payday loan, installment loans, they're around 9 to 12%. When you're looking at credit cards now being around 9%, a lot of payday loans, if you're like in Texas and certain states, they charge 3, 4, 500% annual interest. So when you start to see this, or compounded annually, when you start to see what credit card companies are charging and you're starting to see these defaults start to pick up, even though they're charging 25, 28, 30% interest rates, it's still not going to be enough. When this number hits 12%, 13%, and their balances are 15, 20, 30, $50,000 balances and they're just having to write them all off as a loss, I mean, the credit card interest rate's not going to offset those losses. Meanwhile, the CFPB, Consumer Financial Protection Bureau, and the White House are working for the U.S. consumers, they say, to go against credit card companies who paid $130 billion in fees. Consumers paid $130 billion in fees. They're saying that they need to reduce the amount of fees that they're paying on late fees. So basically, consumers are not penalized for paying their bills late, as well as credit card swipe fees. So they're doing everything that they can possibly do to incentivize credit card companies to reconsider credit. They're doing this. You have to ask yourself why. Why are they going to do this? Well, I think there's a variety of reasons that are going to shock consumers. But first, before I get to that, cold holders were charged $105 billion in interest last year, $25 billion in late fees. The tally represents the highest amount of interest of fees ever measured by the CFPB data. A separate analysis from Wallet Hub estimated credit card holders paid roughly $163.89 billion in fees and interest last year. The site assessed data from the Federal Financial Institutes Examination Council between 2018 and 2020. Such charges are roughly $120 billion per year, right? So they're saying, credit card companies, they're making too much money. They're making too much money. But here's where it gets very, very fascinating. During that period when everyone had a lot of money, 2020, 2021, all this stimulus was coming out, people were sitting on so much money, making money, millions in NFTs. People are doing, all these different crypto coins and altcoins, and it's really, you basically didn't need any skill at all to make money in stocks back then. But a lot has changed since then. So from March 2020 to August 2021, they amassed $2.1 trillion in excess savings. JP Morgan defines excess savings as anything saved above and beyond what consumers normally put away. So now consumers are at $148 billion as of last month, and this came out October, right? So as of last month, so September, as of last month, $148 billion. But let's just say that that's what they have today, right? They weren't burning any money. They have $148 billion today. That would mean that since August 2021, that 26 months has passed, right? So you have $2.1 billion minus the $148 billion, which is what they currently have. It gives a difference of $1,952 billion, right? Meaning that they're spending about $75 billion per month. That's what they're spending. Consumers are spending $75 billion per month. And inside of a 30 calendar day month, they're spending about $2.5 billion every single day, which would then mean in 59 days, they will basically be out of money. 59 days. But then the big question is this. Consumers who have been propping up the U.S. economy when no one else is around, now the debts are being called and they can't pay their bills. So sure, you have all these credit card companies making all of this money, but at the end of the day, what's going to happen, I believe, in January, in February, in March, consumers are going to start making big questions, and they're going to answer big questions. They're going to say who is going to get paid and who is not going to get paid. They're going to feed themselves first. They're going to prioritize their spending in terms of survival, many of them, right? And so a lot of credit card companies are going to start seeing, I believe, more and more defaults. I believe student loans, we're going to start seeing a lot more people default. Auto loans, we're going to start seeing more and more defaults. But during this period, period of uncertainty and fear, you have to remember, there's so many people that make so much money during this era. The people that go out there and, they'll buy even just one deal priced very, very well, and they hold on to it for long term, it changes their life, right? You don't have to go out there and buy 100 deals. You don't need millions of dollars, but you might just need one good deal. It could be a complete game changer. But the thing is going to be getting access to credit, putting yourself in a position to have the knowledge to know where to invest, how to invest, what you should be doing. That is going to be what's going to be most important. And I believe when you look around and you see the amount of debt, the amount of leverage that's being held on auto loans, on credit cards, on business loans, you're going to start seeing a lot of people being forced to sell, being forced to even sell their businesses. And this is going to be a big opportunity for some that are going to be positioned for this. But what you want to do is you want to make sure that you have cash. You don't have to have millions. You have some cash. You have enough to get through the storm, or you have an online business that has the potential to bring in cash, or just a really stable job. You want to make sure you have one of the three. You want to make sure you're out of high interest rate consumer debt. And you want to have different relationships with different financial institutions, maybe American Express, maybe Visa, maybe Discover. You want to have more and more relationships, because some of these credit card companies, I believe, are going to cut limits, some may not. And so the more relationships you have with credit card companies, credit unions, banks, the more options you'll have. And the better of a credit score you have, the more people are going to want to lend you money and do business with you. Because the higher risk you are, the lower your credit score, the higher risk you are, the less entities are going to want to lend you money, especially in an environment where defaults are going to continue to soar. What do you think about this situation? Do you think we're walking into a scenario where we're going to start to see this 2.1 trillion, now at 148 billion, go to near zero or maybe zero in the next month or two, and defaults are really going to start to soar? And it's going to likely be the greatest wealth transfer of all time. Drop your comments below. Have a conversation about it. Hit the like button. If you'd like to fix your credit to position yourself, we'd love to help you, give you a free strategy session at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Just one late payment can drop your credit score upwards of 180 points, stay on your credit report for upwards of 7 years. So any issues at all, maybe even in the past you had one or two little hiccups, go to GreatCreditFast.com. We'd love to help you. We'd love to give you a free strategy session. I'll catch you in the next video.